I have the first management on the show lined up for you. It's Supriya Lifescience. Posted a good set of first quarter earnings. Margins coming in at a multi-quarter high. The company's exports now contribute to nearly 80% of their sales. So to discuss this and more, we have with us Satish Wagh, who's the whole-time director and executive chairman of Supriya Lifesciences, joining in the stock, holding up with a gain of about 1%. Thanks a lot, Mr. Wagh, for joining in. The key takeaway that we have from the conference call is that you have two opportunities at an advanced stage in the CMO business, and CMO should actually start contributing from third quarter of this financial year itself. So on those parameters, I wanted your thoughts on, in this year, what could CMO be as a proportion of your overall revenue, and going forward, what is your target here?
So basically, I told you that we are working in the regulated markets. If you see the entire quarter, 80% is exports. And when we are doing in a regulated market, we are cutting the size on the products from the Chinese market. Wherever we are going to produce the CMO, CDMO activity, they are required worldwide because the current people who buy, all the companies are buying from the non-GMP plants. And we always say that we are a US FDA regulated plant of GMP, and it's a secured and a good sustainable product which will be delivered by the plant. So this is how we are very strong, but cannot give you the right the amount, but we will do our best because we are going to work with a good size of EBITDA margins.
By when does CMO become, let's ask you, by when does CMO become 20% of your revenue, and what is the target beyond that?
Sir, CMO, which we talk, CMO and CDMO, these are we talking with some therapeutic categories where all multinational companies are getting associated with us. So we will be working for them with a smaller amounts, but soon it will be very good, large amounts with them, and we will be a permanent supplier for those companies all over the globe.
Okay, all right. Hi, Dr. Wagh, and good day, and thanks a lot for joining in here on CNBC-TV18. Well, the street is quite impressed with these numbers, and when you get a good start to the year, then it could be even more pressure. So give us a couple of numbers. For the year, what kind of growth will you be looking at, given that you have capacity that's coming on stream from the second quarter onwards? So for the year, on an average, what is the growth estimate that you're looking at? And margins have recovered to the high 30s. What is the range we should work with for this year on an average?
So let me tell you, I am in this business for last 38 years. A very matured person in the business and understands what is the exports and which are the therapeutic exports are required all over the globe. What I see in the future, let me tell you, these are the molecules which I am going to take away from China market. They are very big in terms of dollars. Billions of business is done by the companies who are manufacturing in China. So we stand today with a confirmed thing with everybody that we will deliver you from the audited US FDA and GMP-CGMP plant. That's the main thing which we are giving it to our customers.
Dr. Wagh, Dr. Wagh, we get that what you're saying, and I've gone through some of your con calls over the last couple of years. When you listed as well, we have a couple of interviews. So your vision is very, very clear. You're looking at grabbing market share. You believe that China +1 is up and kicking. But from a stock market perspective, they look at the share price and they would like to know what is the way ahead from here on. So last year you did around 570 crores and the year was a little bit volatile. The blended margins you did was around 30%. Now on that sort of a base, given the start you have to the year, the quarter one is very good. What should the growth number look like for the year? And margins from 30%, what does it move to for the year? Give us two numbers.
Sir, growth, if you see, is 22%. This year we have done, last year we did. And this particular 22% growth which we have done for the quarter, we are confident we will deliver the same or better than this, which we expect.
Got it. Okay. So growth out of the way, 22, 23% at least. Margins?
Yes. Margins wise, we have this year delivered EBITDA of roughly around about 39%. We will definitely and confident to do in the future also the same one, because we have identified the business where we are going to hit the market. And today, the world is looking for those items because the GMP plants are not there at all in China, but they were forced to buy. So today, they're very happy that the source is getting moved away from China to India.
Wonderful. So 39%, what you've done in the first quarter, will you sustain for the next 3 quarters as well. So you'll end this year with 39% margins.
Yes.
Wonderful, Mr. Bak. You recently had a Health Canada audit as well in some of your plants where there was clearances that you got. So we just wanted to know how much in terms of a business can you get from Canada? And there is a second, there's a US FDA audit in the second half of this year as well. What plant is this at and what are you expecting here?
Sir, as far as Canada is concerned, that audit is over.
Okay.
The material has already moved to the Canadian authorities in the plants. It's a regulated product. So whenever regulated product, then it takes time. It takes minimum 6 months to 1 year for converting into the business. But things are moving in a positive way. And as I told you again, that the products which we are talking is required to the world from the GMP plant because they are helpless today. That's why they were buying. And I'm confident the products which we are going to manufacture will definitely give a better turnover, better performance and better EBITDAs.
Okay, so what do you mean by better EBITDAs? Because this year you will end with 39%. In the past, you've actually done EBITDA between 45 and 46% as well. This is the second quarter FY23 that we're talking about. So from a long-term vision standpoint, what do you see as a sustainable and an acceptable margin for you? Is it upwards of 40%, closer to 45%? Or you are happy with this 38, 39% so long as your revenue grows 20, 25%?
Sir, I'm not at all happy. We should get a better EBITDA. So we select and work with those therapeutic categories. And we always love to deliver better things to the market because the market needs today integrity and sustainable business person who delivers.
When you say better EBITDA, what is better EBITDA? Is it 45%?
Sir, it will always, it is always, we cannot say the percentage, but it will always be a better EBITDA. That is as per the satisfaction of the market and as per the satisfaction and betterment of the company.
Okay, all right. Very quickly, sir, before we let you go, I recall that in FY23, you did revenues of close to around 460 crores approximately. And you said in the next 3 years or so, that's somewhere around FY26, there's a possibility you could double your revenues. Is that still on?
Yes, that is what is in my mind. And I will definitely try to do that.
So 900 crores
will start. Let me tell you, I have 2 operations. One at my current site, where we already invested more than 100 crores. The validation and the standardization is going on. The another one is in Amarnath, the second site, where we have invested 100 crores. That also validations have started. I am confident both these plants will start working by October end.
So 900 crores of revenue target by FY26, given your capacity expansion. It's a pleasure talking to you. Yes, that's an aspiration as of now. For the time being, we'll hold you to the 22% for this year. Thanks a lot, Dr. Wag, for joining in. We get the China Plus One strategy, the way you're looking at the business evolving as well. We'll hold you to these numbers, though. For the time being, we'll slip into a short break. On the other side, another management is waiting for us, Jyoti CNC Automation. Stay with us.